Bank of Canada will announce its latest rate decision, of course, tomorrow morning at 9:45 a.m. Eastern Time. We'll have that decision for you, of course, as soon as it is announced. The decision comes at a difficult time, of course. Does the bank cut rates to support an economy facing a tariff-induced slowdown, or would that risk boosting inflation, which is still running ahead of the bank's 2% target? Let's talk about it with David Doyle. He's head of economics at Macquarie Group. David, thanks a lot for joining us. Yesterday, you issued a preview note, you and a colleague, a preview note from Macquarie, headline, "To cut or not to cut?" ? You said at that point, this is only yesterday, your base case is for a 25 basis point rate cut tomorrow. You did acknowledge the possibility of a pause, of no move on rates, and you said the reason to be cautious on the prospect of a rate cut, in other words, the reason the bank might cause, is the recently firm inflation data. Well, since you wrote that note, we saw some softer than expected headline inflation data this morning from StatsCan. Did this morning's inflation numbers change your view at all?
Well, no. We had the 25 basis point cut in advance of these data, and we would see the data this morning as supportive of that call of the Bank of Canada, continuing its rate cutting cycle and moving by 25 basis points. Tomorrow. In fact, it wasn't just the headline numbers that supported it. A lot of the detail, the trim and the median measures that the BOC targets on a month-on-month basis were 0.14% month-on-month. That's the lowest reading in those measures on average since early 2024. So we found those results encouraging. We think it should allay some of the BOC's potential fears that inflation was proving sticky, and should give a green light in some respects to cutting tomorrow.
You see a bank more concerned with growth than inflation, and the most recent data, this morning's data, gives it a bit more room to lean that way.
Yeah, I mean, absolutely. You can see, Paul, that the headwinds mounting for growth. Unemployment was up in the most recent months to 6.7%. We had a month of steep monthly job losses. Housing has continued to struggle. Home sales, we think, are going to be a substantial headwind to economic growth in the first half of the year. The small business confidence measure has declined to the lowest levels on record. And you saw in the Business Outlook survey released last week a steep decline in hiring and CapEx intention. So I think that there is almost a burning platform here in terms of what's going on in the growth backdrop, and that's understandable given the tariffs that have been implemented, the retaliatory measures that have been implemented, the overall trade environment, and of course Canada, a highly trade dependent economy. We think the BOC should cut tomorrow. The reason why we're a little bit hesitant on that call is that the market isn't fully pricing it. The market probability is still only about 37% as I check my screen. And I think that's because of some of the cautious messaging that came across in the summary of deliberations from the March meeting. We don't put as much weight on those deliberations because we think a lot has changed over the last few weeks, and what's changed has been supportive of further BOC action.
In fact, you told readers of your note yesterday that you think the monetary policy report, which will be issued tomorrow, will result in changes to the bank's forecast. How dramatically do you think the bank will downgrade its forecast for economic growth here in Canada?
I think it will be quite dramatic, Paul, and unfortunately for viewers, it's possible that we see real GDP in 2025 indicate a decline on a 4Q on 4Q basis. It depends how aggressive they get with their tariff and trade war assumptions. But if you look at what they were forecasting in January, I think they were 1.9% on that 4Q on 4Q basis. That number is going to take a big hit. And we think alongside that, some of the underlying inflationary pressures that people had been concerned about a few months ago should moderate. In fact, you can make a strong case that the output gap, which is at the end of the day the driver of underlying inflation in this economy, is likely to widen over the course of the year. So I suspect that you'll see a 25 basis point cut tomorrow. I don't have a crystal ball, so I can't say that with certainty, right? I don't. Tiff Macklin might be the only person right now that knows, and he might not even know what they're likely to do. But we do think that there's a strong case for a cut, and that there will be subsequent cuts in forthcoming meetings as the BOC looks at the growth trajectory of the economy and feels compelled to respond.
It's got to be difficult for the bank to make forecasts based on the tariff news, which changes literally every day. Not only do we get different announcements and differently shaded announcements out of the White House every day or almost every day, but even here in Canada today, as you know, the Canadian government has announced a dialing back of some tariffs that affect the auto industry and some tariff relief for industries affected by U.S. tariffs. And the U.S. tariffs themselves seem to be very much a moving target. How difficult do you think it is for the bank just to get its hands around the source of the expected weakness in the economy?
Yeah, I mean, like us, I'm sure that they are constantly updating their assumptions, constantly updating, what they're putting through in terms of tariff rates through their models, and that just creates another source of uncertainty. And for what it's worth, Paul, if it's uncertain for us here at Macquarie, if it's uncertain for the Bank of Canada, you can imagine just how businesses are feeling, right? Businesses don't know what tariff rates are going through, what the countermeasures will be, how to navigate, all the different moving pieces out there. And when that happens, of course, they don't know the rules of the game. And when you don't know the rules of the game in a capitalist system, people put down their pens and they say, we're not going to play. And that's one of our fears for this year, is that businesses just say, until Canada, until the United States, until people figure out what their trade policies are going to be and what the tariffs are going to be, we're just going to put down our pens and not play. And that means less business investment, less hiring. That creates significant headwinds for the overall economy and for the standard of living in this country.
David, thanks a lot for joining us today with your insight. David Doyle, Head of Economics at Macquarie Group.